Vanguard is an absolute behemoth when it comes to assets under management and runs some of the best and cheapest index trackers and ETFs in the world. Although we couldn't find any UK specific information on market share, we can glance over some US figures to put things into context.
The 10 biggest asset managers have roughly $13 trillion in assets, and Vanguard holds over a third of that money. Interestingly, Vanguard isn't the biggest ETF provider. That accolade goes to BlackRock's iShares. iShares doesn't seem to have the same cult following as Vanguard, but surely only an idiot investor would ignore them. According to Morningstar.com, when it comes to ETF market share, and again this is US data, iShares has 39% market share, Vanguard has 25%, and State Street, who trade under the name SPDR, is third with 16%. We'd expect the UK market to be broadly similar.
Regular watchers of this channel will know that our investment vehicle of choice is the exchange traded fund. But is Vanguard the de facto choice, or should investors be investing in the ETF providers' competition? Unlike actively managed funds, ETFs are limited in how they can differentiate from the competition. This has worked out fantastically for investors because it means that the ETF providers are participating in a fee war, or one could argue, a race to the bottom.
The objective of an ETF is really to track an index as closely as possible. And in order to do this, fees need to be kept to a minimum. And the best way to keep fees to a minimum for an ETF is sheer size of the fund. They need to be as massive as possible, because with size comes economies of scale, which is why the biggest ETFs are often the cheapest.
Before we get into the nitty-gritty of the video, we thought it'd be worth pointing out to newbie investors that you don't have to choose just one ETF provider. A good investment platform will allow you to invest in almost any fund that is available. Now, with that said, in this video we're going to look at Vanguard versus iShares versus the competition for a passive investment approach. Let's check it out.
Welcome to MoneyUnshackled.com, the investment channel and website that sets you and your finances free. This is Andy, I'm Ben, and if you like what we have to say, hit the like button and click subscribe.
Don't forget to check out the MoneyUnshackled.com offers page, where we have hundreds of pounds of cash bonuses that you can snap up when you sign up to any of the investment and peer-to-peer lending platforms listed. We'll put the link to the offers page in the description below, so be sure to check that out. Let's get into the video.
Why Vanguard? Let's start out by giving Vanguard some serious and well-due respect. They are just awesome and our favourite fund and ETF provider. We like to think of them as the Amazon of the investment world. When you shop online, if you're anything like us, you want quality service with very competitive pricing and without having to shop around. Amazon ticks all of these boxes, meaning we can always go to Amazon no matter what.
Although Amazon may not always be the very cheapest, they are always competitive, meaning we can pretty much ignore all other online retailers. And it's not just us saying that, the market share of Amazon would suggest a good number of people agree. The point we're trying to make is that we see Vanguard in exactly the same light. Every single fund is either the cheapest or not far off.
This is precisely what most investors want. Let's be honest, investing is already complicated enough without having to shop high and low to find suitable investments.
To trust any business to have the consumer's best interests at heart is probably rather foolish of us. Usually the only reason a business acts in this manner is due to competition. Competition is always good for the consumer. When a business has a monopoly, prices go up, service comes down, and the consumer suffers.
We trust Vanguard because of their mission, and their actions back this up. Their mission, according to Vanguard, is to take a stand for all investors, to treat them fairly, and to give them the best chance for investment success. In business, if you do the right thing, you win.
We've seen this as they regularly take an axe to their product fees and their platform fees, whether this be their ISA account or even their newly launched SIP account, each of which has industry-smashing low fees.
What do Vanguard offer? Accounts. So, Vanguard have recognised that no matter how low cost their funds and ETFs are, much of this would be undone by extortionate platform fees. But worry not, because unlike other ETF providers, they offer a range of investment accounts that allow you to invest in Vanguard products directly for a rock bottom, simple fee. They are currently offering a stocks and shares ISA, junior stocks and shares ISA, SIP and general account, but no sign of a lifetime ISA just yet.
Whether or not you use Vanguard as a platform, you will have benefited from the constant price pressure that they put on the other players in the market. With the launch of the Vanguard SIP, we'd be very surprised if other platforms do not respond by slashing their own SIP fees. If other players don't act soon, then no doubt they will see millions and millions of pounds being transferred to Vanguard.
Funds and ETF range. Another massive tick in the box for Vanguard is that they offer all of the essential funds and ETFs. Those familiar with our channel will know that we aim to own the entire world. You can never be totally sure about the prospects of any particular region or sector, but we're confident that overall the world is going to grow.
Vanguard break down their fund offering into the main regions of the world and further break down into equity and fixed interest, aka bonds. Surely they couldn't make it any easier to build your own fund portfolio, right?
Well, actually, they do. They offer some wonderful funds of funds, which are essentially entire pre-packaged portfolios consisting of their own funds. These have a life strategy range and target retirement range, and we encourage those who are not particularly confident about investing or simply cannot be asked to self-manage to check these funds out.
After the glowing reference of Vanguard, you're probably thinking, wow, they sound perfect. Well, they're not quite perfect. They don't offer some asset classes that you may want to invest in, such as real estate and commodities. And remember, we're talking about the UK Vanguard. We know that the American version is very different.
You will of course get some exposure to property through some of their equity funds, but many of you would like to see dedicated property funds. We certainly would. Likewise, we'd like to see some commodity ETFs, similar to what other providers offer.
Our favourite ETF provider for commodities is LNG, and for real estate, HSBC, SPDR and iShares are all pretty decent. But we know if Vanguard would expand into these asset classes, they would bring something new to the table.
What about iShares? So we've bigged up Vanguard in this video, and much of the same can be applied to iShares. But we still feel that Vanguard was and still is the price setter in the UK market. For many years before Vanguard entered the UK market, iShares were the best and cheapest ETF provider in our opinion, but they soon started slashing fees further when Vanguard entered the fray to stay competitive.
Part of me feels that they only did this to remain competitive, more reactive than proactive. This aside, they offer a much wider range than Vanguard across all asset classes, but outside of their core ETFs, which are very competitively priced, the prices begin to increase slightly. We guess that this is the price you pay for an incredible range and availability of less popular ETFs, which will cost more to operate. It's easy for Vanguard to offer lower prices across the board when they only offer popular investments.
For an experienced investor who will understand all the different aspects of an ETF, iShares is wonderful, but a downside of choice is complexity. iShares offer hedged ETFs, which are great to reduce currency risk. They offer ETFs focusing on specific sectors, factors, themes, etc. For example, they have ETFs that invest in the aging population, global water, timber, automation and so on, which we actually think is great for the satellites in your portfolio. We tend to stick to regional ETFs for our core and then supplement them with exciting stuff like this, and iShares have some awesome stuff to offer here. For example, I invest in the iShares Robotics and the iShares Healthcare as satellites in my own portfolio.
iShares do not offer their own accounts though, so you'll have to invest through any other decent investment platform instead. This isn't a bad thing, but worth mentioning.
How does performance compare? Now, we can't compare every ETF between Vanguard, iShares and the competition, and you'll be relieved to hear that we're not going to try, but we will be doing it for one of the biggies, the S&P 500 ETF.
Each fund has a rock bottom ongoing charging figure of 0.07%, but this isn't the only thing that determines whether an ETF is any good. What's important is how closely it tracks its index. We've always been told that ETFs can never beat the market, but when we look closely, we found that both of these ETFs did actually beat their index. At first we thought this must be a mistake, but both ETF providers are reporting a similar story.
To prove that we're not going mad, here are both ETFs versus the S&P 500 index. Usually a good ETF will narrowly underperform the index, but these two are something special.
Now, if we compare performance against each other, we can see that performance is practically identical. There is actually two lines on this graph, but they're so close that one is hidden beneath the other. That's awesome. To summarise all this, we think that Vanguard and iShares both offer incredible products that we feel confident investing in.
Question of the day: which do you think is best and why? Let us know in the comment section.
Thanks for watching! On this channel we talk a lot about personal finance, investing and all things money. And if you want to see more great content, please click the subscribe button below.
This is moneyunshackled.com. See you next time.